Good day, everyone. Today is July the 28th, and this is Anne-Marie Band with the Midday Moneyball Report. We have had a very interesting morning. It's been very whipsaw, but let's take a look at what's happening. For me, intraday trading in this environment becomes very difficult because the moves in and out feel like they have to be very quick. And I'm just not feeling the rhythm for it, or I would have us engage, but I don't want to engage us simply to engage. I'd like to engage and win. So that being said, what we are doing is making new highs. Let's take a look at what's happening. I believe we are in a mean reversion event, and let me show you what I mean by that. Let's go to the monthlies for both SPY and Qs. And what we're going to see is that we're underneath simple moving averages that are downward sloping, but we've stopped heading lower. And so I did this in yesterday's video. I said, hey, reversion to the mean is more than likely. And so that's exactly what we've got going on. And so what is the storyboard? Well, barring some kind of madness, which seriously, the market could have anything go on, I expect it to walk through this area at 406 and then potentially have a move into 412 where we have a little trouble. So the pullbacks are still buy zones. I was not quick enough to have the pullback here to engage this morning, and I should have been, but I simply was not. This is what we're looking at. The problem will be as we head to the top, we are going to slam right into sellers. I mean, right into them. We are not going to bounce and hold through this formation. We simply are not. Now, are we in a squeeze? Yes, there are a lot of people that are wondering to themselves, holy cow, why is the market going up when all the bad news is pointing to the markets being down? And the simple answer is a lot of times people get in front of a move before it begins. And what we have to do is figure out where we are on the field before we start thinking about those sorts of things. And this is a typical reversion to the mean event. It could still be an inside candlestick. Actually, I do expect it to be an inside candlestick into the end of the month. And that is day after tomorrow. And so my thought is pullbacks are still buy zones across the board. Look at it from the Qs. They just tested the prior day's high, still holding fairly well. Notice the breach. We're coming into the close of 2 months ago, May, and that close is somewhere around 307, right? And we are above it. And then we are looking at the open of the prior month, which is 310. And then we've got this area, which is the close of April and the open of May. That's about 312. That, folks, is really where I suspect we are going to have ourselves a little bit of a stall out here as everybody pushes forward. So what are we going to do? Well, we're going to try to position ourselves into this space of upward rotation. But I do think we have an exhaustion move to the north, a pullback that gives us another support event, and then a run, potentially higher in a bigger market squeeze, because so many folks are thinking we should be on the other side of this trade that they are essentially on the wrong side. And so what we are seeing is a lot of chasing technically. We've got a fairly bullish pressure event that says, hey, go long into your resistance area, take some profit, raise your stop. And so until the next time, look at us, on the 4-hour, we're upward. On the daily, we're upward. And for the first time in quite a while, we actually have got a fair amount of candles sitting above an upward sloping 5 simple moving average. That means the environment's changed, right? We are in a reversion to the mean bounce on the larger time frames. So the path of least resistance at this juncture continues to be up. Doesn't mean we won't have a fade. Why? Bearish markets do not hold breakouts without coming back for a retest. That's a very important piece of information. Put it in your memory banks, and I'll see you in the morning.